Yeah, we see it.
Good deal. Good deal. We'll get this party started here. Um, so ultimately, what I'm gonna try to go over here is is how I utilize this VIX as a timing tool. Not only for to enter a trade, but also to exit a trade. Um, and and what and what it allows me to do in terms of um, lots of times we'll get ourselves in a good trade or what we think is a good trade in the middle of the day or any time in the day for that matter. And the trade just doesn't seem to pay out. It just, it'll go just a hair and then it'll come back on you. And it just really ain't got no movement to it. And then the next thing you know, you find yourself in these situations where you can't really make any headway and you're constantly just fighting and fighting and fighting throughout the day. And a lot of this has to do from where you are inside, either outside or inside, or on either side of the range, um, or going down into fill gaps. And ultimately, what you're trying to achieve is how to time the trade. In other words, there's always typically one or two good moves throughout the day. And how do you always get involved in those? And that's really what we're going to try to go over right here. Ain't nothing super crazy. Should be pretty simple to go over, but let me get this into one chart. So first and foremost, I guess this is the best way to see this. So going into Friday, this is what I had. Let's see if I can get this thing matched up. So I had a one, and this is the only thing I care about, right? Everything inside here doesn't really matter to me. But again, this is just a Bollinger Band strategy. This ain't nothing, nothing nobody don't already know, I guess. But the reality of it is this is the way I trade, right? I want to trade off of a Bollinger Band setup, right? It gives me specific areas to know where I want to get involved. If price come down here, I would probably want to get involved if the VIX told me that it was a good idea to go long right here or here or here, or, go long above here or go short above here, just whatever the VIX told me to do. So I'm watching all of these levels just as a spot to be involved. So for instance, if this thing come up here and set up for a short setup or a long setup, you know what I mean? And should have maybe took a short right here. If the VIX didn't tell me to take a short right here, I'm not going to take a short right here, right? Because that's how we get ourselves in a bunch of trouble, right? So, you could have got yourself short here, you know what I mean? Maybe, but it come right back up on you. You probably would have moved your stop by the time you got right here. It would have come right back on you, you know what I mean? And then just barely come down and then come back up again. It's just like it's unfavorable to trade right here because there's no real follow through, you know. But those keeping all that into account is ultimately where you need to get involved and where you don't need to get involved, and knowing exactly where you should get involved, and it also is going to let you know exactly where you're wrong. So anyhow, this is just my forward strategy. It's a Bollinger Band strategy, and I'm looking to trade off of these levels only when the VIX tells me to, right? So I guess that's what I'm trying to say. But now, anyhow, I'm gonna go back to the VIX so you see what I'm talking about here. And I'm gonna put to sleep how I draw these levels. Okay, so if I'm trying to draw, let's see. Let me get over here to where the opening close was. What in the? Did my levels? Why in the hell are my levels moved? Hold on one second. Why am I missing data?
What are you missing exactly?
I had lines drawn in it. The daggum thing is. What in a tarnation?
Look at your saved chart, where the name saved chart up to the right. Is that a different one?
Yeah, that's what I'm saying. Huh. Okay. Well, I mean, I guess I'm forced to draw these levels here. Whatever. Jesus. That's crazy. I don't know where they would have went. But anyhow, so if I'm wanting to draw a level, I'm gonna find the close of the 1 minute candle. I'm gonna plot a line right there. And I'm gonna find the open candle and the close of that candle. Okay. That's my range for the day. Let me go ahead and get rid of these red lines. I don't know what. That's so weird though. My lines have all moved. Shit, I bet Rylan come in here and start messing with stuff. Okay. Anyhow, so here's my range. You've got the open and you've got the close. Now there's several different ways you can look at this, right? This is a no trade zone for me. Because anything inside of this to me is chop, right? It just, you do not get no follow through. This is exactly why I don't trade Mondays, right? Or this is also why I do not trade, certain news days, is because you're never going to get follow through. You're not going to have any consistent trading results if you trade inside of this range. Over a long period of time, you'll find out that this does not favor you at all. And I want to approach this to where everybody has a good understanding of. I'm not telling you, hey, you need to trade Bollinger Band strategy. I don't give a hoot what kind of strategy you are trading. This one piece alone, if you add this component into your current strategy, into whatever strategy you are using, you will immediately gain one hell of an edge just by utilizing this in the way that it's done. And I've got thousands and thousands and thousands of trades to prove exactly what I'm telling you. So this is a no trade zone. There is no doubt about it. You don't trade here. Put it in yellow. That is a no trade zone. Anything above is short. We'll put it in red. Anything below is long. That's the way you need to look at your day. Any way you approach it, it's not saying that you can't take a short down here in this bottom, right? Because this move up, you certainly could have took a short. There's no doubt in my mind. However, the likelihood of you getting stopped out by taking a short when longs are favorable, you're doing nothing more than counter trend trading, right? And it works sometimes, and then for the most time, it does not work. I mean, I personally don't know a single successful long-term counter trend trader. So, if you're shorting anywhere down below this range, the likelihood of you getting stopped out and the likelihood of you getting in any type of a trade that's going to pay well is very low, right? Think of this as, swimming down a river, right? As long as you keep taking longs, any long opportunity you see inside your strategy, again, it doesn't matter what strategy you use. If you find a long setup and the VIX is running on the bottom side of that range, that's like swimming down river, right? You're going to go further and you're going to go faster with less effort, right? Whereas if you take shorts down here, you're swimming upstream. It's going to take twice as much effort, and you're only going to go half as far. So I guess that's the best way to say that. This ideally, no trade zone. Below is long onlys, and this above is short onlys. Now, this is where it becomes important to know where you are. I'm going to delete these boxes so we got an understanding of that. So there's two ways you can look at this. If you cannot get clarity out of a 1 minute chart, there's nothing wrong with using a 1 minute or a 5 minute chart. I like to go to a 5 minute chart if I can't get clarity on the 1 minute chart and see what it allows me to see. Okay. Well, we knew. Let me get rid of these. I swear to you, I don't know why in the hell all my stuff got moved. Anyhow, that was our range. We'd already said it, right? The open and close, whatever. Okay, so if you knew, the first thing I'm going to look at is, okay, what color is the cloud? The cloud is telling me that the likelihood of downside is it's pretty high because momentum's carrying you that way. So I'm obviously looking for long setups anywhere throughout this, So if I come over here and I say, okay, well, the VIX opened up, it come down, and then it's come back up into its upper level. These are the extremes. You got to understand where the extremes are. This level is the extreme. This upper Bollinger Band is the extreme. You know what I mean? This upper Bollinger Band is the extreme. So that's what I'm saying is look for the extremes of the extreme, right? And that's where opportunity will be, So for instance, you were up wee early in the morning, right? It gapped open, come back down, tried to fill the gap. It didn't. Come back up and it touched up here, around 4:05, 4:10 in the morning. Now here's where the magic happens. Let me get two of these. You know what? That's what it was. I had the wrong screen open. Huh. Okay, we're good. We're golden. Oh, let this thing load in here. All the levels. Oh, it's down here. My bad. Okay, so and again, this can be any strategy. It does not matter what strategy you use. For me, I've already got these Bollinger Band pokes, setups already marked up. So I'm prepared on this NQ chart or MNQ chart or whatever you're trading. I'm prepared over here to take trades in certain places as long as the VIX tells me when I should do it, right? So I know price come up, price come down, and it come back up in here to an extreme, which is that open close range. All right. So at 4:05, what is it? 405, 410 right here. I don't have a Bollinger Band poke there. I just don't. Let me see if on a 1 minute it comes. See if there was some type of setup that you could have taken at 405, 410. There was not a Bollinger Band setup there, but I mean, there was maybe something in your strategy told you that you could take a long right there. You know what I mean? Maybe like I don't know. Maybe that was a divergence on some lower indicator or whatever. Maybe that touched whatever your strategy may be. For me personally, I didn't have anything there. Might have, could have went. Down to a 15-second. No, I didn't have anything. I couldn't have done anything with that. 405, 410. No, I mean, I just feel like I'm trying to put a square peg through a round hole here. There ain't nothing there. I couldn't do anything with that. But that's ultimately what I'm doing, right? I see this happening over here on the VIX. Okay, now I'm referring back into my NQ chart and I'm saying, do I have a setup? How can I find a setup? Okay, well, I started with a 5 minute, went down to the 1 minute, went to the 15-second. Probably could have went down to the 5-second and maybe found something for some reason to get long right here, right? And obviously long was the play because that's 785 all the way up to 850. You know what I mean? And really, you could have just said, okay, well, I'm going to trade from this extreme to this extreme. Nothing wrong with that. So you could have traded that move through the vehicle of the NQ, right? Or ES, whatever. It's all relative. But ideally, right, I'm going to say I've already got this level drawn up here. And in my mind, I'm saying, okay, well, I want to take a trade. We know going into this move, right, up here, there's no way in hell I'm going to be taking a short off of that, right, at 850. I mean, we're well outside the range. You know what I mean? So there's no way I'd try to take a short over that. So I would have to let that actually become an over-under, right? That was a failed BB setup. So you'd let it come up, come back down. Okay, now I'd be interested in taking a long at 955-ish. Well, let's look what happened at 955-ish. Oh, okay. We're coming into the cloud. Longs are favorable. We do know this. So you had a push up, right? And now you would be looking for your setups. Okay. And well, hell, there is your setup, right? You knew we done busted above it and it come back down into it, right? Into a Bollinger Band setup. And there's no reason that you could not take this setup right here when it's already longs are favorable and it's pushing up into an extreme, right? Right down into a Bollinger Band setup. And then bada bang, bada boom. You know, low risk, great reward. You know, that's how you time a trade. You're trading the VIX, but ultimately you're only using the NQ or the ES as the vehicle to trade off the VIX. You know, that's ultimately what you're doing. And you could have gotten short here or long. You know, you could have gotten long here and said, okay, well, I'm going to stay short until we close that gap. And you close that gap at 1020, 1030. 1020, 1030. Right there, top of the move. You know, you could have got out there. You could have got long here. You know what I mean? And got out of most of your position, if not all of your position right here. And the hell, that was a great freaking trade. You know what I mean? That's a 100-point trade with virtually no risk on the table by only utilizing the VIX and knowing exactly what you should be doing, right? You knew off this Bollinger Band exactly where you was going to be wrong, right? Or for me, since your setup, who gives, you know, whatever you're using to trade with, you could have lined it up with this, and you could have took that long trade coming up into this, you know, that would have been an option. And then I guess throughout the rest of the day, so when the VIX comes down into a level like that, right, you had a gap, you had a weekly close, and you also had a Bollinger Band set up all within that little area. So realistically, I wouldn't have been holding long past that, I would have gotten out of all my position right here. And I would have waited for this thing to set back up, right? And all is well and swell, and it still applies, right? You know momentum's still down, nothing's changed. You're looking for an extreme on this chart, and hopefully try to trade it on this chart. Well, it comes down, comes back up, back test into that level. So around, let's see, around 1205, you might have could have took a little bit of an opportunity if you had a setup over here. 1205, 1205, 1204, 1205, right around this little area. Okay. You could say, okay, well, there you go. There's your trade. If you're a Bollinger Band person, I don't know what your setup would be. You know, it doesn't matter. But for me, I could say, okay, well, I'm gonna box this itty bitty tiny candle. Right? There's your poke. You had a lower low. Comes back into it, does your poke. There you go. Trade this rascal, whatever you want to do. Take some off. 930 to 70-point trade, you know. But that's how you do it, right? You're not really trading this chart. You are, but you're really trading this chart at the extremes to utilize it over here on this chart to tell you what you should be doing and when you should be doing it, right? Because you can't just trade this thing anytime and anywhere. You know, that's where you get yourself in these spots where, you know, holy hell, could you imagine getting long right here? Anywhere right here. Like, nothing is safe. Absolutely nothing is safe in terms of a stop goes, because it's just literally barcoding. You know what I mean? Wicks to the top, wicks to the bottom, just horrible. But if you utilizing the VIX, you would knew, okay, at 1205-ish is a good time to try to get long, right? Longs are favorable. You found the extreme. You're looking over here. Now you're finding the extreme here, you know, which I am if I'm using my Bollinger Band strategy. You know, I don't know about whatever strategy you guys use, but that's it's all the same, right? It's all relative. You find yourself in the spots to utilize the VIX to tell you when it's time and when it's not time, right? There was nothing right here that said, hey, you need to find an extreme. You not even quite right there, right? Your extreme could have been found, you know, somewhere back up into here around 5:40 in the morning. An extreme could have been found at 8:30 in the morning. Another extreme could have been found around 10, you know, around 10. Yeah, around 10. And the next extreme opportunity would be somewhere around here around 12:30. Well, there's one more opportunity that come, and it was right around, what is this? 1405. Let me get rid of this Bollinger Band. 1405. 1405. Mm-hmm. Yeah, 1405, 1406. I ain't got nothing. Okay, so I'm on a 1 minute, right? I see this over here, and I'm saying, okay, well, I want to get stinking long. I just don't know how to get long, right? I don't see any over-under setups, you know, happening right there. I don't have any Bollinger Band setups. So then I'm starting to say, okay, well, shit, I still want to get long because that's, you know, that's the thing I need to do. 1405. How can one get long? Okay, right here. You could get long if you were, I could have gotten long. I still didn't have anything. I mean, if you really wanted to force the issue, you could have gotten long right here at 1413, but I don't see nothing. Yeah, I don't see anything to get me long at 1405. So I couldn't have took that trade. I mean, clearly that was the trade, right? I mean, you know what I mean? Like into the close, this thing ripped, right? You got in at the very, very bottom, you know. but clearly that thing ripped, but I just didn't have a setup to take. So therefore I couldn't enter that trade, but that didn't mean it, somebody else's strategy didn't allow them to, in terms of maybe a breakout or whatever. You just knew where that extreme was and you're looking to try to capitalize on that opportunity and get long when you can on the extremes of the extremes through the vehicles of ES and the VIX, that kind of stuff. But that's ultimately how you use it, right? That's how you're able to time your trades and get the absolute best price. Because let's just be real, right? Let's say you got long. Jesus, let's see. 1405, 1405, 1405.
I think that
Okay.
the last time that the VIX pops up in that box is 1452.
1430. Yeah, 1430. So
That's
right here you could have got. I mean, I'm just saying there was your opportunities, right? You could have got in on the first one and you would have never got stopped out, right? Because you knew exactly where you were wrong. If you've heard me say it before, well, here's exactly how you know we were wrong, right? If this thing would have come up here, we know we come up through here like that, right? If this thing would have come up here and done this number, right? Broken above that, come back down, you know exactly where you're wrong. You're wrong right here at the top of this, right? That's what invalidates, a Bollinger Band strategy, or, for that matter, the gap close. You know what I mean? You're retesting in that weekly close, retesting that gap that just got filled, and you're retesting that Bollinger Band strategy. So when this thing comes up into the extreme, you know exactly where you're wrong, right? So there's no need to guess it. And what that allows you to do is step in front of a big move, per se, down here, right? And say, okay, well, I want to get long here, but you're looking at this chart and you're saying, okay, well, shit, if it gets up here, then obviously price is going to continue lower, most likely, right? So you know your extremes and you know exactly where you're wrong. Well, there's no need. You can use any kind of stop method you would like to use. It doesn't matter. Use 13.75. Use what the hell ever you'd like to use, an ATR. It doesn't really matter because at the end of the day, this is telling you you're wrong. Price is going to come down and it's probably going to move a little bit right here around you, but it's got the backstop of this to protect you, So there's no need. So for instance, say, there's certain examples that you could use. So for instance, if thing busted up above it and come back and back tested it, right? That would seem like a viable short opportunity over here. Well, you got to realize where the hell you are in the day, right? You're way, way, way below this thing. Obviously, shorts are not favorable because it's nothing more than a counter trend trade. And if you look at your results over the course of time, well, you ain't doing nothing but kicking your own ass. Let's just get real. That's all you're doing. So you utilize this VIX in this way, and what it allows you to do is always be on the right side of the coin. You're always swimming downstream. You're not swimming upstream. And you're just finding the extremes of the extremes. And you can use whatever long, short strategy you have to get long and short the VIX, right? Say, for instance, you wasn't even trading the NQ chart yet. You just wanted to put your strategy on top of the VIX. Okay, well, apply it. Just know you got to use this component, right? The component being longs below the range, no trading inside the range, none. It's not worth it. And shorts only above the range. That one component alone will put so much edge in behind your current strategy, whatever the hell it may be. You'll be surprised. And some days, you know what? This range will be huge, and it'll stay inside that range all day long. But you know what? You will save yourself from getting chopped up. You'll save yourself from getting just completely frustrated with your day because there's no real direction, right? You have extremes of that day. Don't get me wrong. And the likelihood of it, yeah, you can take trades inside of it But if you do decide to take trades inside of that range, understand that it's quick in, quick out. And when I say quick in, quick out, would have been like if you could have got long at 1405, you got in long here, took half off into the cloud, took the other half off into the upper Bollinger Band. Those types of quick trades. You know what I mean? Because that's what you get inside of a range. And you kind of understand the way the cloud floats, right? If the cloud is heavily pushing into something, momentum is high, telling you to the downside on the VIX, which in turn is upside on the NQES. So if you see the VIX kind of flat inside the range, find you something better to do. You know what I mean? Just don't even worry about it, because we as traders, we really try to think that we're smarter than we are. In reality, we ain't. And it's the data that tells us that we ain't, right? And you say, okay, well, on my stuff I use, right, and some of this other stuff that I've plugged in as a recent, if I take a trade inside this right here, I put inside range IR, right? That's attached to any trade that I have. Okay. Say for instance, my monthly deal, right? Say I made $10,000, right? Just say I made $10,000 in a month. Okay, for easy math. I exclude these two trades, all the IR trades, inside range trades. That month would become a $25,000 month. That's the magnitude of how many losses you're going to take and how many small wins you're going to take, right? It's just inevitable. Like it's not worth it. Yeah, it's something to do, but really it's killing you. You know what I mean? Like, don't trade this shit. And if you're counter trend trading, put a CT beside your thing and say, okay, well, I took shorts all through here. Well, you know what? That was a counter trend trading all day long. That's all that was. Put CT beside it. And same thing up here. If you're taking, longs up above this opening range, put counter trend trading beside your trade. And at the end of the month, go through there and exclude counter trend trading and exclude inside range trading and see what your results be. I guarantee you, you will have more than a 50% increase in your P&L. Way more than you can imagine, just by not trading when you're not supposed to. Don't trade counter trend up here. Don't trade counter trend down here. Stay with the momentum and stay away from this inside range and utilize the extremes. Put yourself on the right side of the trade at the right stinking time. And I'm telling you, it doesn't matter what strategy you use. You continue using any strategy that you prefer and just use this component along with it. And I promise it's going to change the game. It's going to change the game for you guys, for sure. And it can be used for multiple things, right? I know a lot of people don't trade it, and I don't trade it. But I'm about to start trading it. So let's look. I'm about to start trading it and gold. So here's crude oil, right? Granted, this is a delayed version because these rascals don't offer the right version. So I have to use Thinkorswim to make that all happen. So for instance, here's how I'm approaching it. Shit. Let me see. Let me get a full screen. So here's my stuff, right? I've got a 5-minute Bollinger Band level up here. I got a 1-minute Bollinger Band level here, 5-minute Bollinger Band level down here, and a 1-minute Bollinger Band inside that 5-minute Bollinger Band, right? These are my setups. I'm waiting for price to do something right here. But I don't really know what the hell it's going to do when it gets there. So I don't try to be smart, or I don't try to be smarter than try to be smarter than I am. So I'm going to utilize the component. God dadgum, what have I done? See what I mean? Try to be smarter than I am. Okay, so I'm going to use a VIX component with oil. Same deal, same thing. You've got your close, you've got your open. There's your range, right? No trade room, longs only, shorts only, right? So I'm waiting for. Well, we'll see in the morning actually. So the range is actually going to be down here for in the morning. This was Friday's range, by the way. Sorry. So let's just look at that real quick. So say you woke up, you're just trying to figure out what crude oil is going to do the day. Who knows? Nobody knows. So here's your crude oil chart, right? You would have had levels up, right? There was a Bollinger Band level. There's no doubt about that. So anyhow, you're actually looking over here. Where's the extreme, right? We already know where the extremes are. That's our range. The extremes are on the bottom side of it, right? Your extreme's going to be the top side, the bottom side, right? And then anything below that, like Bollinger Band pokes, anything, whatever you use to go long and short in your own strategy, you need to use that for extremes, right? For me, I'm going to use a breakdown of the range, a back test into that range, and that's going to give me an idea of where I'm looking to go long or short, right? So let's see. It broke down below. That's a 5-minute. Good Lord. Okay, so it broke down below. You had a small opportunity right here at 950, 952, 950, 952, 950. Yeah. Your first opportunity would have been looking at 950, 955, 950, 955. $9.55. Okay. Well, there was your opportunity, right? You back test into it at 950, 955 ish, right? So you could have got long right here, 950, 955 ish, anywhere right in this little area. And there you go, right? You could have just gotten long at off of Bollinger Band setup, and it is whatever. It doesn't have to be a Bollinger Band setup. There again, it can be any strategy that you use. You're actually utilizing this type of stuff, but you get the point. What I'm saying. So yeah, you got long crude oil. Into this, right? It's viable. It's a Bollinger Band setup, right? You knew your risk. And I mean, shit. You would take. If I was trading this, right, I would be looking over here for other setups, right? I would have taken one off here. I would have probably taken another off here, and I'd move my stop. Oh shit! And I'd move my stops up, probably in behind this little area right here. I don't know. I mean, that's how you do it, right? I guess you could have said, okay, well, I was going to get long here, going to get long here, going to get, you know what I mean? Like you could have been trying to catch this bottom, but in reality, you didn't have to, right? You're looking for the extremes to catch the bottom. That's all. So that was the extreme. Here was the same time you're using crude oil as the vehicle to trade, you know what I mean? The OVX, right? That's all it is. And even right here at, what is this? 10:08, 10:07, 10:08, 10:07. I don't have anything I could have got long right there with on that poke up. I don't have anything. I couldn't have got long right there. I would have had to get long right here off of a Bollinger Band setup, right? Yeah, I don't have anything. I don't have anything. Nothing. Anyhow, that's the gist of it, right? I don't get whatever, I mean, I could have told you how I would have traded that, right? I would have got long here, took one off there, took one off probably right here. I would have took another off. I don't know. I may have just held the damn thing and just moved my stop up here and behind, each lower high and actually got taken out over here. You know what I mean? But nonetheless, we're still talking about from a 96 to, a $98 move, with zero, um, with zero question, right? Of what to do and where to do it at, right? You literally ticked the bottom almost. And it wasn't because you done anything super awesome and super special. It's you were actually looking over here and finding the extremes of where you can be involved and the likelihood of it, right? Now, if there wasn't a Bollinger Band set up over here, there's no way in hell I could have took that trade, right? Or, for instance, if it's one of y'all strategies or whatever you guys use, it doesn't matter. If you didn't have an entry there, you just don't have an entry. You know what I mean? Like you got to trust your entry and exit setups. That's all. But you do that in regards of, the component of me telling you how to utilize this inside outside range and find the extremes of it. That way you time your trades better. If because there's times that it comes down here and it hit this and you just ain't got no setup. And you know what? It is what it is. I mean, you ain't, and sometimes it can be for good reason because this thing liable to go back through the other side. But if there is a setup there, hey, you got to take it, right? And that's how it all works. Inside, outside, and it works like this. Gold also has the it's also got its like VIX type component, and you utilize it the same exact way too, right? It's all the same. So your NQ, your NQ, UES, that's under the umbrella of the VIX. The OVX is under the umbrella of crude oil, and gold has its own little deal. I have to actually go and think or swim to find that ticker for gold. But anyhow, that's what it is. I think y'all getting the gist of it. But again, if you're utilizing these this is the most, I mean, I guess this is the most important chart that we have to look at, right? Because this tells us the likelihood of where things are going and where they're not going, right? Or at least it tells you when the hell you're wrong, right? You can look at this illiquid ass NQ chart and never know when you're wrong. You know what I mean? Like you've got to know where you're wrong. That is the key to it all. You can find yourself, you're wrong inside here. You're wrong if you just take a short when the you know what I mean? Like if you're just wrong if you take a long as the VIX is falling down this lower Bollinger Band, right? It just makes no sense. You know what I mean? Like you need to find the extreme, and then you just turn right around, and then that's where you take the extreme of the extreme, and then it pushes into here, and that's where you find yourself in the best spot to get rewarded handsomely on anything that you're doing. So that's basically how it is. And again, the 5-minute VIX. If you're not having clarity from a 1-minute VIX, just set your opening and closing range on a 1-minute close and a 1-minute on the close of the 1-minute candle. Let me go back over that so there ain't no absolute confusion on this deal. So you're going to set your close on a 1-minute chart. It's the close of the last 1-minute candle, and it's the close of the first 1-minute opening bar. That sets the range for the day, right? And then if you're having trouble seeing the clarity of it, then switch to a 5-minute chart because it's easier to develop. Then you switch to a 5-minute chart and you can kind of see the picture a little bit better, right? But sometimes you want to utilize a 1-minute chart too, so I mean you kind of got to flip back and forth, but it's all relative within whatever strategy you're using. It don't matter what the hell you use. The biggest deal is inside the range, no go. Outside of the range is absolute yes for shorts. And breakdown of the range is an absolute yes for longs. That's the best way I can put it to you. I mean, there again, whatever you would like to do in terms of your own strategies go, that's the best way to do it. Just add that component in and then release all the other shit. So attach IR to any trade that you took inside this range, and then attach CT counter trend to any long that you took up here, and attach CT to any short that you took down here, and remove those 3 trades and only keep the ones that were, correct trend, and then see what results you end up with, right? You'll save yourself tons of headaches, and, you've removed most part of your bad habits. That's it.
I got a couple questions.
So-
So when you're talking about where you draw your box on the VIX, right? You
Yep.
said, and we know you do the close of the last 1-minute candle, so the day before VIX is closed. But you said you do the open and close of the opening candle. How do you use that's an extra line? So I always knew that you had one from the close and one from the open, but that's a third line. So how do you use that third line? Because I don't see another line there in open and close. Do you just use the one that's farthest away?
Trying to figure out.
I have some indicators, by the way, that probably make this a little easier for you to draw these, but I'm gonna change
I've got an indicator for all this. I've got this fully automated actually, but I was just trying to show everybody as easy, you know what I mean, like how to actually manually do it.
Yeah.
So
I'll work
what do you
on
mean
something
third
for the
line?
group well, because you said the close of the 1-minute candle from the day before, and the open and close of the 1-minute candle for for the open that day.
Yep.
So so like that 1-minute candle, the open and close, that open would be above that, right?
Yeah. So you're using the
open
close
or close.
You're using the close of the close and the close of the open.
Okay. So the close of the open. I heard open and close. So I was like, well, that one's new.
No, it's the close of the close. So you got the close of the close and the close of the open.
Okay,
yep.
Got you.
And that sets the range for the day.
Yeah. And my other question isn't necessarily about how you draw this out, but I don't know about y'all, but I have a 15-minute delay on my VIX through TradingView. So are you dealing with the same thing?
Nope.
Is there a way, does anybody know how we get an updated one?
Thinkorswim is live data for free.
Yep.
But he's using TradingView.
Yeah,
he pays for data.
Yeah.
On TradingView?
Yeah. So you can get it for free on Thinkorswim or pay for data on TradingView.
Which one are you paying for? Because I was paying for all of them originally, and I still had it delayed.
Premium is what I've got.
There's 2 different VIXs, Goose. You got to go
Be
to the
careful
right
what you
VIX.
click
That's
on
CFD.
here. Okay. Yeah, I don't want you to expose because I know this is being recorded, so I don't want you to expose your profile, your account information. But
Yeah, I mean, so you just go up here to add, and then you should have VIX,
uh-huh,
CFD, TVC. That's the one I use.
uh-huh. What's that bullseye there?
Go to symbol.
Oh, yeah, I don't have that. Yes, I've always noticed that there's always something just a little bit different on your VIX chart than there is on mine. I do have the TVC on there, I just I don't have real-time data on it, and I tried to figure out why, and I couldn't figure out why.
Does it say delayed? Do you have a D beside this?
No, I sure don't. But it sure is always about 15 minutes behind on my actual chart.
Shoot them a message and see what you can come up with on that. They should be able to figure it out for you pretty quick.
Yeah, I need to do that.
But there's no way to get like the OVX. It is delayed, and there's no way to not have it delayed on here. They just don't have it. So I use Thinkorswim for mine. So, but it is indeed delayed. This OVX. So it's not usable on here. You can't use a delayed chart. It's impossible. But Thinkorswim, they've got everything that you need. But if you've got the real estate, then I would go that route and save you some money or whatever. But
That's weird, Goose. I don't see that. I don't see that. I don't see the D, right? You see
Yeah,
the
it's
D?
not there
Oh, you
for
should.
me either. But wait for intraday. I mean, I don't know if anybody. I mean, because if I didn't know it, I wouldn't know it. But if anybody look at it intraday, and you'll see that it is always behind. Especially you notice it on the 1-minute chart.
so is it like right here's the OVX? It says delay. It's got a D right there. Yours don't say data
No.
is delayed.
No, it doesn't. But but yeah, it's behind 15 minutes, and I've had that problem for over 6 months, and I just kind of dealt with it.
Yeah, you
So
can't trade.
yeah, I'll check into that.
Yeah, I'd give support a contact or reach out and say this has got to be fixed.
Right.
Yep. Anybody got any more questions?
So when it came down there, you used. I'm trying to find some content here because I have a lot of content that doesn't necessarily apply to the VIX though. But when you came down here, and you picked up that trade down there, you're using that level off the weekly close and that gap, right?
Yeah, but it's irrelevant. Like that. This strategy is my strategy, right? So
Right.
I'm not telling you to use Bollinger Bands and use the Bollinger Band setups. That literally is probably the least thing that anybody needs to do because the understanding of the way the Bollinger Bands work, it's I don't know. It's very it's just tough to do, right? I guess that's the best way to say it, right? In my little old mind, it made sense to do it this way. I just had a setup right here, but ultimately, you had if I take this setup away, if I took a
Well, I
setup
know that.
away, you would have a gap fill right here and a weekly close, right? So the Bollinger Band part was irrelevant, even though the Bollinger Band strategy said pick up right here, but you had these levels of weekly close and the gap fills, you know what I mean? Like that.
Right.
But
And
ultimately,
does
whatever you use inside the market to go long and to go short, apply that strategy to the VIX. But just the main thing that you need to know is no trading inside the range, no longs above this range, and no shorts below the range. And apply whatever current strategy you use, and it's exponentially going to improve your trading. Exponentially.
So I know that occasionally we have days where the range is pretty wide.
Yep.
And if VIX is in it all day long. And so there's just no trading to be had that day, right?
Well, there is, but I mean, at the end of the day,
At, at a
it's got to
higher
be.
risk.
Well, it's just the higher risk of you got to go, from band to band. You know what I mean? You take a short here, get out here. You know what I mean? Like
Right.
otherwise, if you stayed in it, well, the next candle you got took you out at break even, or just ticked your stop. You know what I mean?
Right.
It makes
So
sense.
higher risk trades, more likely scalps. Bring in your
But
RR.
but just do yourselves a favor of labeling your trades, and you know what I'm saying? Like prove yourself that this is what I'm telling you is to be true. Put IR beside any trade that you take inside this range. Put CT below any short you take below the range, and CT above any long that you take above the range. You apply those three filters to every trade that you take that I just explained. Remove those trades out of your trading and watch your equity curve go from up, down, up, down, up, down to a smooth 45-degree angle going up.
I'm sure we all like that. So for confirmation, and I think this is probably my last question. I have on my VIX chart, I have that we created I don't know how do you say a pay attention moment at 1450. That's what I have at 1450. We touched a band. Now that would be 1450 my time, so it'd be
1550.
1550 your time.
Yep.
Okay, so you agree with that would have been a moment where we went, okay, we can look for
Longs.
for a trade here. Yeah,
Yep.
a long.
Look for
Okay,
long.
good. Because I do have a trade that I could have, and I believe I did take at that time on ES, and that was the kind of verification that I needed to look for. So BB touch on the VIX actually does work pretty well then. A lot of us use a BB touch for something or other. So
Yeah, I mean, just whatever. I mean, and it honestly could be anything. So, say for instance, if you have a 50-period moving average or a 25-period moving average, and you take trades off of that moving average when it's trending, and it comes back and touches it, right? So you would have had you would have had a long setup here. You might have had a long setup here. People use trend lines. People use all kinds of shit. Like, you know what I mean? It's just whatever works. Just say for instance, if you had a trend line, you were a trend trader. You know what I mean? Say, okay, well, here's the trend. We broke down below it. Well, there's my opportunity to go long, right? I mean, strategies are endless. You just got to do whatever makes sense to you and apply it to this. You know what I mean? Like I'm not telling you to use the Bollinger Band strategies at all.
On the VIX. See, I thought when you said that you meant like on the product, but I get it now. You don't have to use it on the VIX either. So you're just looking for what the range tells you to do. So if the range tells you to go short on your product, then you go short on your product. This day said to go long on your product. So when the VIX makes what would be a short setup, then you're looking for a long setup on your product.
That is correct.
So
yeah.
Okay, gotcha.
Within your own strategy, yeah, absolutely. Gotcha. Just think of this as I just put this chart to be, it has none of my strategy stuff in it. All that it has is this range, inside range, outside range type stuff. That if you utilize those components and apply your current strategy, it's exponentially going to increase your equity curve to the good.
It does seem to me that the Bollinger Band touching a cloud is probably the simplest way to decide if that's a good entry, but that's just my opinion. That looks that way to me.
But again, I encourage anybody to take this opportunity and go through their work and just say, okay, even starting tomorrow morning, the next trade you take, you put IR beside the trade that you took. It was inside the range, and you put CT and any long that you took up here, and in CT any short you put here. Apply those to your trades, and at the end of the week, end of the month, whatever, take those trades out of the equation, and I promise you, you're going to see your equity curve exponentially increase. You're going to understand it's not healthy, and it's not beneficial to you to try to do that, right? And if you can eliminate those things, you immediately are to the good,
the way I can you hear me, Magnum?
I got you, buddy.
The way I see it, what you're looking for is basically New York session to kind of break out of that the Europe session or the Asian sessions out of there. So it's deciding a trend, after trapping or whatever, breaking out of that range of the Europe and Asian sessions, because that's the time basically from the 3 a.m. until 9:30 a.m.
Yep.
Or the close of the New York Open until that open. Okay, that makes sense. I like it, man. I like it.
Yep. It's ultimately like a timing tool, and B, it just puts you on the right side of it. I'm not going to tell you that you're not going to take a loss on a long down here, because it's highly likely that you will, right? I mean, it's just nothing is 100%. It's just not, right? But it puts enough in your favor, if you take whatever current strategy you utilize and you apply it to that, that inside outside range deal on the VIX, it just puts another component in your favor, right? And it literally is the difference between swimming upstream and downstream. One's a hell of a lot easier than the other. I ain't saying you can't do it, but you damn sure gonna have a tough time doing it.
I definitely like it. It makes sense because it's the fear that moves the markets. It's you're creating the fear of that asset.
Yep.
Makes sense.
Yep.
So, question off of that, what Jitter just said, Magnum. What is the, like macro view of VIX being in the range? Like, just what's the human behavior or the traders? I'm just curious to if you have any kind of thoughts on that. What is going on? What are people feeling? Is it just a struggle between or a fight between bears and bulls? That's why it's within that VIX range, or is it something else?
From my experience, to be honest with you, I find this to be a hunt for liquidity. And it's one of them deals where you screw as many people as possible by their break evens, and you constantly stop them out right here as many times as you can to where they move that stop further than they should. And that's usually when the moves happen, right? That's my experience that I've found is this is nothing more than just like a liquidity grab. They get as much as they can get, and then they'll push it to the extreme and they'll flip it the other way. And that's where you see these real great, long-sided trades or short-sided trades that last all day. And everybody got screwed here and they just had to watch it all day long. Right. And it's just like, it's a terrible thing, but it's the reality of trading. It's knowing what's not opportune versus what is opportune, and opportunities, they don't come often. So you gotta be willing to step up to the plate when they do come,
Okay.
You've got a lot more historic, like you've looked at this at the VIX movement between 2 a.m. or 3 a.m. your time and open. How often does it like it did on Friday? It seems like it spent almost that entire time consolidating, and it didn't drop out of it until 6. And we did have news, so I don't know what it would have done after 6. But how often does it consolidate in that range like that?
Often, very often. I mean, if you look at it, right, you had 1, 2, 3, maybe 4 opportunities. I had 4 opportunities to get long throughout the whole entire day.
And 6. So like between 2 or 3 a.m. and that would be, I guess, your 7 a.m. It stayed. They made that range, open and close, right? You've made that range, made that box, and it stayed in that all the way until we had news before it finally came out of it, and then it stayed out of it all day. But if I look at the day before, hold on, okay, look at the day before we made that box that closed, and then again it opened, and by 3:20 a.m. the VIX was way above that box, and then didn't come back down to it until midday the next day. So my question is, and I know this is kind of a weird question, how often does the VIX come up out of the box immediately, but how often does it consolidate like that all the way until New York Open? Because that would potentially mean something to me, to be honest with you. Like I see data in that.
it's the macro outlook, right? Markets trend 30% of the time. So 70% of the time, it's inside this range. You know what I mean? Like in a macro view, right? That's kind of the way that it is, you know. And you know, that's how the majority of people get screwed, you know. That number wasn't a pie in the sky number, you know. I mean, that's facts. Like the market actually trends 30% of the time. You know, look, if you just look, right, that's a trend. That's not. That's not. That's a trend. That's not. You know what I mean? Like that's not. It's just it trends so little, and that's why opportunities are so small that you have to be willing to step up to the plate when they do happen. You know what I mean? Like it's just, um, you know, that's just the way it is. But what this VIX does is allow you to utilize the opportunity that comes, right? You know ahead of it where opportunity is, and it puts in check your risk, and it puts in check of, I mean, because if it don't correspond with whatever strategy you use on the NQ or ES chart, then there was no opportunity there, right? Don't take a trade here, you know, off the VIX on the NQ or whatever ES if the setup's not there for you. It's just not there, right? The likelihood of it can fail will be failed. So, you know, think of it as you're trading the VIX, but through the vehicles of the ES and NQ, because that's ultimately what you're doing. You know, and you know the craziest part about it is, right, people have figured out a way to use multiple time frame analysis on, say, the NQ or ES chart, but in reality, that is nothing more than a crutch, because at the end of the day, if you're having to use an hour candlestick, there is a lot of shit can change in an hour versus an inside outside range type deal, right? You could say you don't know if you're a trend trader, you don't know if you're a counter trend trader if you're just looking at the ES or NQ chart, right? You have no idea, because in reality, if you go back out to a month chart, everybody's a trend trader if they went long, you know? Whereas the whereas the VIX is going to tell you exactly what kind of trader you are, you know? If you find that most of your success lies inside this range, you're a range type trader, right? If you're finding yourself taking shorts up here, taking longs up here, you're a counter trend trader, and you find success in it, right? Or, you know, if you're taking, you know, shorts down here, you're a counter trend trader. Versus, you know, if you're taking longs down here, you're a trend trader. You take a short up here, you're a trend trader. You know, and I can speak to experience. You're going to make a hell of a lot more money by being a trend trader than you are to be a range type trader or a counter trend trader. It's just the facts, because these things go further than you could ever imagine, right? And what allows you to stay in these kinds of trades is, you know, having that outlook of, okay, well, here's the opportunity to go long, or here's the opportunity to go long, and you could have stayed long all damn day long, you know, or to that gap fill. You know what I mean? Whereas if you were just looking at an NQ chart, you're flipping through 5 or 6 time frames and thinking, wow, well, there's a level here, there's a level there, there's a level here, there's a level here. Well, you know what? It's just a level. Did the VIX tell you that it was time to get out? Most likely not, you know? And that's how you're able to stay in these moves for much longer and be on the right side of them, you know?
There's 2 questions in chat, Magnum. One is from Brendan, saying, what do you do when VIX range is wide, like July 12th, and is the 1 minute the smallest time frame for scalping, is the 15-second reliable, and that's from Sunshine.
Okay. So what was that? The 20 wide on 712. Let's look at it. 712. Let's just mark this little rascal up. 15th, 12th. There you are. And there you are. Okay. So going into this day, obviously when you open up with a gap, right? The first thing that you need to think is, okay, well, we're going to try to close this gap, right? That is an immediate first reaction. So what I would do is I would set myself a line right there, and just put gap, right? That's the first thing I would do. Markets love to fill gaps because this is an inefficiency, right? So you're going to say, okay, well, where in this little deal can I get long or get short, right? An extreme lies on the upside of this way, and an extreme lies on the bottom side of this going this way. You know what I mean? And an extreme lies on the bottom side of this going down that way. So you could say, okay, well, I'm going to utilize this as a opportunity to try to get long the market, and the VIX gets pulled down here and fills this gap. That is an opportunity to trade. You know what I mean? That's the way I would utilize that. But of course, that's going to be one of them deals where it's like you would only be able to take the extreme, or you just say, I'm not trading this at all. You know what I mean? I'm not trading inside this range whatsoever. Okay.
Yeah, I think that's the real question because it stayed inside the range all day long.
Yep. And the only opportunity you had would have been when it broke out and back tested back into this, or you probably actually would have took a loss. Let me go to a 5-minute chart, make it easier to see. Yeah, this is where the clarity of a 5-minute chart. Let me turn my stuff back on so I can see what I would do. Okay. I didn't have anything. Actually, there was a gap down here that would have probably gotten filled. So on a Bollinger Band type deal, I would have had nothing. Nothing. Yeah. So I would have probably ended up taking, let me go to the 12th. 14th. 12th. Okay. So we broke down below the level. We come back up in there and we retested. Okay. I would have probably looked to take a long right here at 1300. Had this not existed, you know what I'm saying? Like I would have had to say, okay, well, this is the extreme at 1300. You know what I mean? I'm probably going to try to take a long with the anticipation that momentum is to the downside, longs are favorable. You know what I mean? Like that's an extreme. So 1300. What is this? And again, it's one of them deals where if I don't have a setup, I can't take the trade. I don't have anything as far as an over-under. Don't have anything as an over-under. There's nothing as a reversal type. Nothing. Okay, I don't have anything. I can't go long right here because I don't have anything to go long off of. There's nothing. There's no over-unders. There's nothing. So there's no BB setup right here to take. So I wouldn't have took that trade, right? But I would have been looking to take a long right here. You know what I mean? At 1300, which proved to be a ridiculous. So nothing, right? I would have done absolutely nothing. So I would have had to stay flat. You had your gap up, right? I mean, me personally, I'm not going to trade inside this range. It's not favorable for anything, but I'm just telling you that you could you know, trade the gap fill, right? With that in mind. Okay. You could have took a long here, with the anticipation that the gap's going to get filled, right? And you could have reloaded if if you had a setup right there at 1300. So we're just going to go on over. And the next opportunity is going to be right here at, what is this? 1520. I ain't got nothing. Yeah. I ain't got anything. I don't have a BB setup. Like, I don't have anything to go short right here. Yeah. I don't have anything.
There you go.
So I couldn't get short right here. But ideally, right, if you have a strategy, that allows you to say, okay, I'm going long or I'm going short right here. Well, it come up and it back tested back into it at, 1520. You say, well, I want to go short. Well, in my case, I don't have a way to go in short right here. So, it's just no trade I could have had. It looks like maybe another opportunity, but it's already at the close. So, yeah, that's just a day where you sit there and done nothing, and this shit happens.
Well, you know what? That answer right there might come into a question I had. I know that Sunshine had one, but just to keep it on this topic for a second, the question I was going to have is I know you draw your box you draw it on a 1 minute, right? Your open close for the VIX on a 1 minute.
Yes, on a 1 minute. Yeah.
So if somebody wanted to be more conservative and take less trades, but they just want to be conservative. Would a 5 minute would obviously keep them out of more trades, and would
it opens
more than likely give them more profitable trades, right?
No, it actually opens up your risk. You don't know if you're wrong. So, say for instance, a 1 minute trade, a 1 minute chart, right? On these gap opens and gap closes, you know what I mean? Like, let me go back to it.
I would assume that a 5 minute would be bigger, would be a wider range than a 1 minute, right?
It would, and that's the bad part about it, right? Is because you've got 1 cent of knowing whether you're wrong or whether you're right. You go to a 5 minute chart, you've got a lot more than 1 cent to tell you if you're wrong or if you're right. You see what I'm saying?
Gosh. Yeah. Actually, okay, I see that now. Smaller is better because by the time you get up there, you may be pushing it and taking a trade. You'd actually have to counter trend that trade. Okay, got you. So for Brandon, when he's looking at the 12, saying we've stayed in the range all day, is it possible to go to a lower time frame than a 1 minute to try to find like an even smaller range? Have you ever tried anything like that? I mean, it seems a little.
I mean, I think with what I do, this is more than enough. You know what I mean? Like, I'm not into trying to fit a square peg through a round hole. You know what I mean? It's either there or it's not. And if I can't make it happen on a 1 and a 5 minute chart, you know what? I'm just not going to make it happen. You know what I mean? I'm not forcing the issue.
I think it's good to to answer these because, like, a lot of us, we have our ways of taking something and twisting it in our direction. But you've already done all this stuff. You've got this experience, so there's no point in us, working through something that we could have just asked you about.
Yeah, it's this is what separates long-term profitability and short-term profitability, right? You take this one thing that I've just showed y'all, inside the range, outside the range, swimming with the river and up against the river, and I promise you, with whatever, I don't care what strategy you use, it could be something as simple as a damn moving average, longs above, shorts below, whatever, and apply this one strategy, and you immediately gain an edge. Immediately. And it doesn't even have to be Bollinger Band type stuff. You know what I mean? And I'm not look, I can see Bollinger Band setups from a mile away. You know what I mean? Because that's how I taught myself where, I could, and really, the Bollinger Band setup are nothing more than me being able to define my risk, right? I want to know where I'm wrong, and I want to make that area as small as possible. That's how Bollinger Band setups come to be, quite frankly. This is ultimately how I trade, right? You would think that I trade off Bollinger Bands. You think I trade Bollinger Band setups, but not really. I trade the VIX. And I use Bollinger Band setups with the vehicles of the ESNQ to take my trades from the VIX, So really, I'm a VIX trader,
This is good stuff, Magnum. One last question from my side. Before Brendan, Brendan's question was the 15-second, or Sunshine's question was 15-second. Is that a reliable time frame? And then I have one question after that, which is, what other lines do you put on your VIX besides the gap? That we had seen a few other things on your VIX chart besides the range. Just a quick.
Gotcha. So what I'll do is, what in the hell is this? And they've changed
I think
everything.
that could be a whole nother talk.
It's actually really simple. So when I'm starting the day, I'll have a weekly. So we still got a gap up here we've yet to fill at 30.42 is the start of that gap, and 31.07 is the ending of that gap. But anyhow, so when I start the week, what I'm going to do is I'm going to go to the close of the previous week, and I'm going to set me a level. And I'm going to go to the close of the current week, and I'm going to set me a level. Right? That's a weekly close, previous week close. And that's excuse me, I messed that up. Because it wouldn't have been actually this one. So
open the current week, right?
Yeah. So what I would have done would have been the open of the previous week. So if I'm starting this new coming week out, right, I'm gonna set me a line right here because this was the close of the current week or the week that just finished, right? Wherever that next candle opens at, it could open up down here, it could open up here. I'm gonna draw another line. That's your weekly range, And this is really kind of for almost like she said, a different topic, which is big trades. 1,000-point trades, 5, 6, 7, 800-point trades. It's the same concept, right? Say for instance, we opened up here. Well, price come up in here and back tested into this level, and then it took off, right? Well, I'm gonna be looking to go short, and if I'm looking to go short, I'm gonna say I want to go short here with the idea that we're gonna fill this gap up here. Well, you know what? That's a 5, 6, 7, 8, 9, maybe 1,000, maybe 1,500-point trade. But it's the same concept. It's just on a much bigger time frame, and it's not that deal is not for everybody because not everybody wants to hold on to a trade for a week. The 1 5-minute is definitely for your intraday type trading. This is for your multi-day, big trade type deal. And hey, this time of year it's just not feasible to do that kind of shit. It's just not. It's not in the cards. It can happen, but the likelihood of you getting stopped out or broke even is more high than not on that deal.
I would think though, if your daily, your 1 or 5-minute is coming to an area then you could probably put on more size, lean into that trade a little bit more because the possibility of it coming back further would be there. Maybe you're not going to be in it for the whole week and take the full 1,000 points, but instead of a 50-point trade with 2 micros, you could take a 100-point trade with 5 micros because you've got more area there to depend on, right?
No, I mean it's the same deal, right? I mean, the thing is
if
like
you have both, if you have like your 5-minute coming into the same as your weekly, then you might get a little bit more momentum off of it.
I think that's all strategy related. You know what I mean?
Mm-hmm.
Like, I mean, honestly to God, like if it's for me, I have a Bollinger Band setup. You know what I mean? And that's what I trade. And it tells me what I should do, right? I don't give a damn if I think this thing's going to go 7,000 points, right? It does not matter to me. What matters to me in my position sizing is this. You see how tight that range is right there? It's from 54 to 56. I can afford to put every contract I have on the table on this trade because that's my risk. I know how little of an area I am to be wrong. Whereas if I'm down here, you see how wide that range is from 54 down to 32? I can't trade that range with nowhere near the close to the size that I can trade that range with.
And what are those levels right there? Those are your BB poke levels, right? You just draw them out from before.
Yep, that's it.
On your weekly, you said you use the current weekly close, so you would change that every day depending on if it moved or not, right? Let's say that we just keep going down on the week and the weekly close just keeps getting lower and lower. You're going to keep moving that line throughout the week, correct?
No, it's going to stay the same. I've got a line right here on the close. Right there.
The current week.
Yeah.
Like the week we're on right now. So if we let's say we open and close like right here, right? We open and we close down here, but tomorrow it's the same candle, right? Because it's a weekly. So tomorrow we go down lower. You're gonna leave that line right there?
Yeah, because you've got the close of the close, right? And then you've got the close of the open. You see what I'm saying?
Yeah.
That's my range.
That's your last week's close, Goose. That's your last week's close.
Okay,
So that's
yeah,
already
so that's why okay, okay. That's where I was confused because when you say current week, I think of the week we're currently in. But you mean like right now that's gonna be last week's close.
Yeah.
And then the previous one is the week before.
Yep.
So all right, got you. I wanted to clarify that. Because current week to me means the week we are currently in. Like when it opens up today, it opens up a new candle today. That's current week for me. So if anybody else was thinking that too.
So the way I would look at this is, okay, if it gapped up right here, right, I would look for it to come back down into here and close that gap, right? That's one scenario. Okay, if it gapped down here and come back, I would look to be going long the market. You follow me?
Mm-hmm.
Okay,
Yeah,
that's a hell of a short scenario, right? That's where your back test is, right? You're going to fill a gap up here. That's one hell of a short in the market. This is one hell of a long in the market. You know what I mean? But that's the scenario that you would use. And if it's inside this range, I don't give two shits about it. But this again is long-term stuff. This is not your scalping intraday trading. This is a whole different animal. You know what I mean?
It can help create some bias though.
But I mean, your strategy should tell you what you should do. If you should go long, if you should go short. You know what I mean? It should be very mechanical like that, right? There were so many times that just a minute ago we seen that the VIX said, hey, you can do this or hey, you can do that. But you know what? My strategy didn't do it. So I'm not trading the VIX. I've got to trade what my NQ chart's telling me to do. Is there a Bollinger Band set up there or there isn't? It doesn't matter if this is telling me that it's an opportunity. If there's no setup, there's no setup, right? And don't get too biased upon that and say, okay, well, this is still staying short, so I'm going to go short. You know what I mean? Or we'll go long. You know what I'm saying? Like you can't have that kind of bias, right? You can't make that kind of case because you don't know where you're wrong. That's why we have setups and that's why we have strategies that we use, is because it allows us to get in these positions or these trades and we know exactly where we're wrong. You know what I mean? From what our strategy tells us to do,
Mm-hmm. You write that down.
And I think there was a question about a 15-second chart. I use a 15-second chart a lot, a lot, because there again, if the VIX is telling me that I've got an opportunity to go long or go short, right? I'm going to start at the 5-minute chart and I'm going to go myself down to the 1-minute chart to see if I'm going to start at the 5. If I ain't got a Bollinger Band set up, I'm going to go to the 1. If I ain't got one at the 1, I'm going to go down to the 15, right? And I'm going to go all the way down to that 15. And if I still can't find anything on that 15, you know what? It is a done deal. I can't trade it. If there is, I'm going to take it. If not, and just know your risk is going to be more on the 5-minute. Your risk is going to be a little bit less than the 5 on the 1-minute. And it's going to be substantially less than the 1 and 5 on the 15-second. So,
which is why you don't want to necessarily trade that range, because your risk might be less, but your potential reward will also be less.
correct. Yeah.
You use the 15-second on the VIX as well, or just the product?
No, only the product. Yeah. Yeah, I use the 1-minute and to set my levels, and most of the time I'm looking at a 5-minute just because it's easier to see. Like it's clearer. You know what I mean? It paints a much clearer picture. But if it starts to break outside of a range and then starts to come back, I'm probably going to switch to a 1-minute and watch it do that back test on a 1-minute. As opportunity may be there a little quicker. So. But again, it's use your current strategies, whatever strategies that y'all guys use. It does not even matter. Apply this inside the range, outside of the range, counter trend, those types of things. Apply that only filter, and it's exponentially going to increase the expectancy of your strategy. So it's edge, built-in edge, and people, it's what everybody searches for.
That's what I've been looking for, is a way to exclude trades that have
There's no
less of a
guessing.
probability.
It's just no guessing of what you should be doing. You know what I mean? Like you show up and you're like, well, I don't know what this thing's doing. Well, if it's inside the range, it ain't doing nothing. Well, if it's outside the range, well, you need to be taking longs. You look for longs. If it's above it, you're looking for shorts. It simplifies your day. And there
I think
again,
a lot of us use the VIX because we all listen to you, right? A lot of us use the VIX, but I don't think we had narrowed down quite how you use it. So, I mean, generally we do. I did not personally realize that you're looking for the trade, for the extremes on the VIX, and then looking on your product. That was something I didn't know. I was just looking for whether it was in the range or out of the range, for the trade, for the probability of a trade and the bias of the trade. So that was very helpful.
Good. I mean, at the end of the day, I just want to make sure that everything is put to bed in terms of how I use the VIX and how anybody can use the VIX with any strategy they use. I encourage everybody to take this and apply it to their own strategies, their own work, and take it and run with it, right? And by all means, I really encourage everybody to put IR beside any range, any trade you take inside that range, and then CT upon anything that you do up here that's a long, and CT on anything that you do down here is a short. And then take those three and take those out of the equation at the end of the week, end of the month, and watch what it does to your equity curve. That's what I encourage everybody to do the most. Because anybody can just sit here and tell you some shit, but I'm telling you for a fact, do that, and you're going to see one hell of an improvement in your overall P&L.
Thank you, Magnum. Thank you for your time. We appreciate it.
No problem, buddy. No problem.
I just want to let everybody know that I took notes the majority of the time. I'm pretty sure that I got most of everything important. Magnum, I'm going to type it up and send it to you for you to proofread, add anything that you want, so we can post it with this video. I also have a couple of indicators that, me and Jittery been using. I made for Jittery to kind of keep track of these open, close, even the weeklies. So based on what you've said, I'm going to make an alternative for those to kind of help people draw those lines, know that they're going at the right open, close, even those weeklies. So I just want to throw that out there before we conclude that. I'm going to try to have some follow up for this.
Gotcha.
And Magnum, Cass wanted to ask one question. I apologize. Why not? What is your opinion on VXN for Nasdaq and VIX for ES? I know you mentioned that before, I believe.
Yeah. So if the way that I look at this deal, right, and I want to answer the question directly. So the best way I can tell you this is the thick side of the book, right? This is the thick side of volatility. We do trade an illiquid market, right? And I do understand this is majority of the ES that you're looking at, right? The VIX. However, everything is so correlated between the two that I want to see the thick. And for me, the way that I'm looking at this right here is, are longs being priced in or shorts being priced in? Or is nothing being priced in? Nothing being inside the range, longs being priced in below, shorts being priced in above. I want to see the thick side of the book telling me that, right? Because often enough, you're going to see the ES make a higher high, and then you're going to see the NQ make a higher high. You know what I mean? Like it just pulls it around, basically, in a nutshell of the grand scheme of things. So I want to see it priced in on the thick side of volatility, right? And for me, this is 1/3 of the market. Okay. The VXN, it's the thin side of volatility. So you're going to get a lot more knee-jerk reactions, you know what I mean, in terms of the way that it moves is going to move a lot like the NQ. It's not going to respect a ton of these levels. Whereas the VIX, it's much thicker, you know what I mean? And it allows you to know what's priced in on the thick side of the volatility and what's not. You know what I mean? I find it to be a lot more reliable. I'm not going to say that you can't use it, because you certainly can, and I know some that do. But for me, I want to see it happen on the thick side of volatility to allow that follow through. You know? And for me, I guess the best way to look at this is what you're looking at is 1/3 of the market for me. The NQ chart is the other third of the market for me. And the other third of the market is the OI data. That's the other third. And with those 3/3, I can paint myself a complete picture of the market in its whole. You know what I mean? There's some other variable factors. It's just, and all that really means is like, and this might be better for another day, but if the VIX told me this was an extreme and I was looking to get long the NQ, and say this right here was on the NQ, 12,050, right? Well, I had an OI level down here at 12,200. Well, I'm gonna take that long from 12,050 to that OI number at 12,200, right? That's how I use the OI data, right? Because I believe in the market, auction market theory and all of that goodness. So that's how I'm gonna utilize the OI data majority of the time. So 1/3 here, 1/3 on the NQ, and 1/3 on the OI, and I've got myself a pretty damn good picture.
Do you think 1/3 on the NQ, but so the ES doesn't figure into that, just the NQ?
What's that?
Because you said 1/3 on the VIX, 1/3 on the NQ, and 1/3 on OI. But so the ES doesn't figure into that, just the NQ.
Whatever chart I'm trading. If I'm trading the ES, that's the third.
Gotcha. So
It's
yeah,
in-
1/3 on the product. Okay.
Yep. I hope that answered. Oh yeah, it did. I see. Cool.
Yeah, I think we could build other little classes with Magnum that are specific like that, because I know in the past when we've talked about Bollinger Band levels and VIX all at once, it's a lot of data at one time, and I think that's probably why I've missed little bits here, but
Well,
that's neither here nor there right now.
yeah, I hope that helps a lot of folks. I'm telling you, just apply that one strategy this week moving forward, and you're going to see an exponential increase in the profitable trades, and you're going to see an exponential decrease in your losing trades. Just by this alone, trade your own strategy, trade whatever you're trading that currently, and just apply this filter. and you're going to see that edge. It's going to shine like a diamond. Well, if y'all are good, I'm good. Y'all got any
Yes,
more?
sir. I'm gonna type this up. I'll send it over to you. If anybody else has any questions they want me to throw in there, whatever, then let me know.
Cool. Well, y'all have a good one.
Thanks, man.
No problem.